Welcome to Unpack Your Financial Baggage, where we help you answer one simple question. Will you outlive your money, or will your money outlive you? Here are your hosts, certified financial planner and managing partner of Melone Private Wealth, Lou Melone, and editor of D Business Magazine, RJ King. I'm John Gay. I produce the podcast. I'm filling in for RJ King. Today we're joined by a member of your team, Brandon Carney, who is also a certified financial planner. Welcome, Brandon.
Thank you for having me. It's great to be here.
Yes, young people are not saving. Young people are not fiscally responsible when it comes to retirement. It has been well covered.
I agree. Our industry has done a great job of explaining that young people are not putting money away. But as an industry, we haven't really explored in detail what those reasons are and how to best position financial planning to influence the younger generation to have a plan and to think about retirement.
We've been working on this podcast for a while, and I have a hunch that somewhere along the line, we're going to hear the words behavioral investing and the 9 principles of behavioral investing. Let's get into why young people aren't saving and provide a path that's reasonable and easy to understand. Let's start, Lou, by defining the younger generation. We'll call it under 30.
Yeah, I think, under 30 it's a good place to start. It's a 12-year run from high school graduation to 30, right? So young people find themselves in a vast period of, let's call it change, and encounter multiple life events they've really never experienced before. So it may be the toughest 10 to 12 years of their life.
I remember those 10 to 12 years. Learning a trade, getting a job, college, kids, buying a car, marriage, possibly buying a new home. The only consistency in that 12 or so year period of life is spending large amounts of money or preparing to spend large amounts of money. These expenses are not often foreseen regarding how large they are or when the timing of them might occur.
Yeah, that's exactly right. All the activities, you just mentioned may involve large financial outlays and at the very least, credit card debt that can start to gain steam quickly. Many of these situations, often don't involve a lot of planning. People fall in love and months later, they're certain they should get married. The car that you've driven since high school suddenly needs a $10,000 repair and you need a new vehicle. You may find yourself, as a new parent, and there isn't really a blueprint of costs for a child either. Yeah, there's books out there to read, but eventually you find yourself at a restaurant, thinking, maybe I don't get the steak tonight and maybe a burger and fries will do.
I think we've all been there. The constant at that stage of life is change. The information provided is for educational, informational purposes only and does not constitute investment advice, and it should not be relied on as such. It should not be considered a solicitation to buy or an offer to sell a security. It does not take into account any investor's particular investment objectives, strategies, tax status, or investment horizon. You should consult your attorney or tax advisor. The views expressed in this commentary are subject to change based on market and other conditions. These documents may contain certain statements that may be deemed forward-looking statements. Please note that any such statements are not guarantees of future performance, and actual results or developments may differ materially from those projected. Any projections, market outlooks, or estimates are based on certain assumptions and should not be construed as indicative of actual events that will occur. All information has been obtained from sources believed to be reliable, but its accuracy is not guaranteed. There is no representation or warranty as to the current accuracy, reliability, or completeness of, nor liability for, decisions based on such information, and it should not be relied on as such. Melone Private Wealth, LLC, MPW, is a registered investment advisor. Advisory services are only offered to clients or prospective clients where MPW and its representatives are properly licensed or exempt from licensure. No investment strategy or risk management technique can guarantee returns or eliminate risk in any market environment. All investments include a risk of loss that clients should be prepared to bear. The principal risks of MPW strategies are disclosed in the publicly available Form ADV Part 2A. Generally, among asset classes, stocks are more volatile than bonds or short-term instruments. Government bonds and corporate bonds have more moderate short-term price fluctuations than stocks, but provide lower potential long-term returns. U.S. Treasury bills maintain a stable value if held to maturity, but returns are generally only slightly above the inflation rate. This has been the Unpack Your Financial Baggage podcast. Feel free to share this episode with someone you think it may benefit. You can also follow our show on Apple Podcasts, Spotify, or wherever you're listening right now. To learn more about Melone Private Wealth, visit MalonePrivateWealth.com. The Unpack Your Financial Baggage podcast is produced by Jag and Detroit Podcasts.